So, Eric, thanks for jumping on with us. Really, this should just be packed full of value for all the other app developers, entrepreneurs, anybody really just looking to get into not just business, but specifically software development. So, before we kind of jump in, I know we've talked quite a bit before, but why don't you tell the audience a little bit about you, why you started your company, and just a little brief rundown?
So my name is Eric Espinosa. I'm the founder of Venture Validator. We are a market research firm for startups and helping them find out if they have product market fit, which is simply, do you have the right product feature set, and are you targeting the right market and selling what your product is at the right price? And I'm also an entrepreneurship professor at BYU, where I teach a market research class to all the upcoming aspiring entrepreneurs. So how I kind of got my start was interesting. Is through a lot of failures. It was actually back when I was a student at BYU. My first idea was an app idea, and I thought it was going to be a $1 billion startup like everyone does. And turns out it wasn't. And so I'd done a lot of the quote unquote validation where you go and you talk with people and do interviews and do some surveys, some focus groups. And I had so much confirmation bias, and I was so untrained in actually running that validation that I got all the results back saying that, yeah, your idea is going to be really successful and everyone's going to like it. You just now need the money to go, build something. And I kind of felt like I was in this conundrum where I had a cool idea, so I thought, but investors wouldn't invest in me until I had proof. Yet I didn't have the money to go get investors until I had proof. So it's this kind of catch-22 where you can't really do anything. And it was at this time when I actually really dove into my validation. I had a mentor who really just grilled me, and I looked at things differently. I said, okay, instead of trying to prove myself right, because so many of us entrepreneurs, we're the little guy, we're trying to prove that we're right. I looked and said, can I prove myself wrong? And I started looking at how was I not validated? And kind of
people don't do that.
Yeah, kind of the short story from there is I ended up winning 3 or 4 more business competitions, became a judge at the International Business Model Competition while I was still a student, actually began teaching a class at BYU while I was still a student, started 2 market research firms, and kind of really got into that, had a lot of passion. That's where I'm kind of here at today.
Dude, that is so it's so crazy. I mean, so many entrepreneurs, so many people are so gun ho to find people that are like, yeah, the awesome's idea, and they even start to like cringe when they start to get like feedback or people are like, no, like this isn't a good idea.
People calling their baby ugly, and nobody wants to hear that. And so whenever as an entrepreneur, whenever we hear somebody dislike our idea, our automatic reaction is, well, they're stupid. They don't know what they're talking about. They're wrong. And it's often the case that they're not. And so we just got to go find the right customers and get that feedback and, be intellectually honest with what the market would actually treat that.
Eric, what I know we had chatted before. What was another name that you were thinking about calling your business before? Do you remember what that name was?
Yeah. So my business is called Venture Validator, but my wife's always been on me that I should really change it to the real name, which is Dream Crusher Inc.
Well, it's hilarious because so many times we talk to people that have good ideas, some that have not very good ideas, but people put their heart and their souls into these ideas. Like, this is their life, this is their baby, this is everything. And so they just fall in love with this. And that's what's passionate is really what drives entrepreneurs, right? You have to be passionate. You have to be able to claw, dig, and push yourself to the next level. But at the same time, sometimes you need to hear that your baby's ugly, right? Sometimes you need to know so that you can, because you may think it's a great idea, but it might not be.
Right.
A lot of people just think they have like this really good idea, but how is it that we can get, or the founder can find out and know that their product like is a great idea? What are some just simple things that they can do outside of just talking to, the basic family and friends that are going to tell them, hey, that's a great idea, run with it?
Right. Well, the simple thing is you have to realize, why do most startups fail? And if you look at the actual statistics behind it, the number one reason that startups fail is because of no market need, or there's just no customer demand for your product. 42% of startups fail because of that. For those that are a little bit more versed in startup validation, it means you don't have product market fit. And so having to realize that it's a hypothesis, you need to test. When your first idea comes to your head, you have to go validate and see, is this product feature actually going to satisfy the need of a market? And when you're realizing that entrepreneurs are odd, we're just innately odd people. I mean, it's kind of crazy to want to go start a business and leave the stable income of a job. So we're just strange people, and we're building products for ourselves. If we don't do validation, if we don't go talk with our customers, you're going to build the perfect product for yourself, but you're a weird person. So you got to really jump out of your shell and go do testing. And so how do you do that? Well, it really depends on your level of funding and the level of risk that you want to take on. Because the reality is you can never completely de-risk a startup. And that's okay. You shouldn't try to say, I'm going to prove out everything before I go build anything. That can't happen. There's some learning that can only happen once you've built your thing. But we can de-risk your startup. So instead of trying to launch it when it's just our idea, it's extremely risky. We can do things where if you're really, really bootstrapped, then doing interviews, surveys, focus groups, and following a very, very rigorous process. In fact, I actually have some free training on my website that people can follow if they don't have any money, where you can do that. If you have more money, then you start transitioning over to an MVP, going to someone like you guys that can build that minimum viable product and go test it with your customers. So it's always a trade-off between your time and your money, but there's steps that you can follow that can really de-risk that to the point where you're comfortable building the whole thing and getting it out there.
Tons and tons of companies or new founders will come to us with an idea, and they'll usually be like, yeah, I've got, $20,000, $50,000. What can I get for this? That's like where they're starting. They're like, hey, I got like this $20,000, $50,000. Like, what can you build me? Instead of, taking that $20,000 to $50,000 and saying, or finding out if the market really needs this. And so a big question I've got for you is like, what are you telling people to encourage them that, the money is better spent validating it versus, trying to have a finished product at the end of the day?
Right. Well, okay. When people come to you, what would you say the average number of features that they request to build out of their first idea?
Dude, all of them. They're like, dude,
everything.
I have people come to me and they're like, hey, I want to build Uber, and I've got like $20,000, and I'm like, cool. I'm like, do you want to build the Uber of like 2010, or do you want to build like the Uber now, because you need to like have 10 million for that, right?
Exactly.
It's just not.
And then you tell them, okay, we can only build maybe 2 or 3 core features. What are the most important features? And they're like, well, all of them are important. I want to build this whole thing. And so that's where we say, okay, you've thought of all these features, but you need to find out what is the most important. And I actually use that same example. I say, okay, you're trying to build Facebook 2021 that has the games, that has the marketplace, that has the video, that has all of these things. And I actually show them Facebook 2004. If you haven't ever seen that, go look up Facebook 2004 screenshot. It is the most basic website ever. The only thing you can do is connect to friends at your college. But that value proposition was so unique. It wasn't offered by other people at the time, that you got students to go ahead and sign up. So really the key is boiling it down to what is your most unique value proposition? And founders still can't do that. They usually have 2 or 3 ideas what that is. Now, what's your most unique value proposition, and who do you think is the early adopter or the customer that fits most perfectly? And then going and testing. And if you can boil that down, it's actually not too complicated. The process of doing it does require hustle, and that's why we exist, and that's why there's companies that do this. But it's simply going to that customer, pitching those features, and saying, on a scale of 1 to 10, how close are you to buying this? Where 1 is I wouldn't buy that, and 10 is wow, here's my credit card, I want to buy that right now. Super simple. But the funny thing is, if you don't give people a yes/no question, or you don't say, what do you think? Everybody wants to boost up an entrepreneur, and they want to say, oh, this is really, really cool. Whenever they say that, they're not actually saying the product's cool. They're saying, wow, you thought of this yourself. Like, good job, entrepreneur. Like, pat you on the head. Like, you're doing something society really encourages. Yeah. But if you give them a continuum where it's a 1 to 10, people aren't afraid to say 4. And 4 is a flat out no. They're not going to buy your product. But now we know, okay, the average, if that's a 4, you're gonna fail. And you can now pull that out. But then once you get that person's product market fit score, we call it, you can dive into a lot more deeper information, such as, how can we pivot to something that would increase your likelihood to buy? And if we made those actual suggestions, would you actually change your answer higher or not? And if not, we don't listen to them. If so, then we take that into account and say, do we want to pivot our whole scope of our product to serve this type of customer? Or do we need to say, yeah, let's just not even serve that person. We're getting some 8, 9s, and 10s over here. This is what they have in common. Let's go target more people like that.
People will say, yeah, I'm going to give you a 4. I'm not going to buy this. But at that point, you've invested $10,000, $20,000 in finding this out rather than dumping 50, 60, 80. We have customers who spend hundreds of thousands and they release their product and it's a 4. Right. And so when you look at the mathematics here and you look at the money, because honestly, as an entrepreneur starting a business, funds are the most sacred thing you have right now. Right.
Yep.
And so if you can find out information before actually, dumping and investing huge amounts of money, it's such a win in the long run.
Well, it's all about runway, because that's the thing. If you have a $100,000 runway and you do a couple of $10,000 tests, you can pivot. That score is not static, because anytime you make an adjustment to your product features or to your target market, you get a new score. And so you're really just trying to lessen the cost to test that. Let's go test this with the hypothetical information with a really, really rigorous structure to then go find out what we should actually build to get the actual validation, that MVP, which you guys can go build and now go test that with real customers to verify that. So it's really just getting more at-bats at the same cost.
Yeah, no, that makes a lot of sense. And I really, really hope, especially as the bar for MVP continues to get higher and higher every single year, that more and more founders will kind of go into this. And that's like a whole nother conversation. But specifically with software development, we talked about kind of the score that you have. What are just some general questions that, these founders could start asking to kind of help, create that score or get valuable feedback?
Yeah, it's really super simple. I mean, there are ways to mess it up. Like, you got to go through the training. We have training that the people can go through if they're going to do this themselves. But in general, you just need to make sure that you're talking to your right target market and that you're pitching your feature set the same to every single person. So you can't pitch pie in the sky, and you can't leave holes in your product description so that people are trying to fill in the gaps of maybe some information you didn't give them. Because if Boji, you're going to fill in with your own assumption, and Austin, you're going to fill in a gap with your own assumption. Well, that's now 2 different ideas. That's an inaccurate score. So number one key is make sure that you explain your product efficiently and effectively. And that is probably the biggest stumbling block for entrepreneurs. I'm sure they come to you guys and they just vomit all these features, and you're like, okay.
So many.
Do you even know what the core of your product does? And you might even talk to them for 10 minutes and not even know what their product does still.
That is the beginning of every discovery call.
Yeah.
It's like, cool. I'm like, hey, tell me a little bit about you, like where you're headed. And then the first thing that happens, they start dreaming like this vision, and they're like, machine learning this, analytics this, like blah, 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 blah. And I'm like, cool.
Augmented reality.
I'm like, all that sounds great. I would love to do all of this for you, but like, what do you need yesterday? and start there.
So what we have them, feature vomit, and then, we need to really narrow this down to, for us, it's a 1-pager. You can't have more than 1 page, 12 font on your Google Doc. And it's simply pitching your idea, following a formula where you say, this is my customer, this is the problem, these are the existing solutions and why they're inadequate. And that's really important. And then you say, here's my solution, and a 1 phrase of what it actually does. Like, don't keep them guessing until the end and you just grand reveal. Just tell them what it does. And then you jump into the details. And that's usually, a paragraph to 2 paragraphs. Maybe they have a small video or some type of GIF that's explaining that. So you go to the details, and then a 1-phrase benefit summary. And that benefit summary is simply an inverse of what the existing solutions can't offer. And that's your unique value proposition. It's just the inverse of all the other things, what they can't do. And then whatever your price is, and if it's free, then you say, you got to tell the customer how you're able to sustain yourself. So if it's ads, if it's you're selling information, fine, just tell them. So that's the 7-part product description that you take. And then you go to your target customer and you have to have screening questions. So the biggest reason why most people don't do interviews and surveys and focus groups is because they get conflicting feedback. They'll talk to one group who will say, yeah, go this way. And the other person will go say, no, go that way. And it's really, really conflicting. And as entrepreneurs, we love cherry picking the best information. So we'll only listen to the people who give us good feedback, and we'll disregard everyone else. But that's not how you should do it. It really should be a screening question. A target market is simply a group of people who have similar attributes. And you look at that segment by doing some type of screener. So Maybe it's their age, their gender, maybe it's a psychographic, maybe it's the usage of a similar product, etc. But now we segment that, and then we ask them, okay, after we've pitched this product on a scale of 1 to 10, what's the wow factor score for this product? Get that score from them. And then as far as questions that we ask them, it's really simple. We ask them, what do you like? What do you dislike? And what do you want to change? When we get the information from those people who are scoring us an 8, 9, or 10, those are the people who are going to actually buy your product. So when they tell us, what do you like about the product? Those are the value propositions. And that's how we actually sell the swing group, or the people who are scoring this more 5, 6, 7-ish. And we say, okay, this is the value proposition these people who are buying our product see. We're now trying to sell it to you guys. And then we're also looking at what that swing group, what they dislike. We don't really care too much about what the love group dislikes, because they're already buying it. Why would you spend all your resources trying to perfect something that was already good enough for them to buy it? We want to move up those 5, 6s, and 7s, pick up those features, and then we have the hate group, the 5 and unders. Now, very, very rarely are people who give you under a 5 ever willing to be pleased and ever in your love group, but it's possible that they just think your product sucks. And that's okay, as long as they're willing to move their score up if you were to implement their suggestions. So the next thing we'll do is we'll ask them, so Austin, you said that you didn't like this and that you wanted to change this. Let me pitch to you a version 2.0 of this product. So if I were to give, this XYZ and make this change and that change, what is the new wow factor score for this product? On a scale of 1 to 10, 1, I wouldn't buy it, 10, here's my credit card. And if you go from a 4 to an 8, 9, or 10, that's powerful. Now I know that this actually moves the needle for you, and I should consider implementing this to my whole product description. But most often, you will go from a 4 to a 5. And that is just actually just a nice point. It's not even a real point. They didn't actually move up. But whenever that happens,
thanks
we
for
realize,
listening to me.
Yeah, exactly. It's more like, I gave them feedback and I can't give them the same score. I can't be, let me just give them one more point. That's what happens. Like, we've tested with thousands of people. That's what happens. So then we know, okay, I'm going to completely disregard all of Austin's negative feedback and what he wants to change, because he's not a customer. He will never buy my thing. Yet, as entrepreneurs, it hurts most when people tell us negative things. I think when we were on the call the other day, you said this guy, you had a client who had one negative feedback from one of his customers, and he wants to now redesign his whole app.
Hundreds of thousands of dollars worth of development, by the way. And he's like, dude, somebody didn't like this. I want to be done. And I'm pretty sure it was him. I'm pretty sure it was him who didn't like it.
Right. We're listening to the wrong feedback. We got to listen to the people who are already pleased with their product or are willing to be pleased. And the questions we ask are usually as simple as, what do you like, dislike, and want to change? And then after that, it's, okay, now I know those feature sets I need to deliver. And of course, you can ask pricing questions and other psychographic questions, but that's really dependent on each individual case.
I feel like you make it sound like it can be super easy to go and find like just a general group of people and see if they want to buy it. But I'm guessing like that is really not true. Are you just so established at this point? You've got like this big list. Like, where can these new like entrepreneurs go and find like their target audience and start actually like getting stuff in front of them and asking them questions?
The number one thing it takes is hustle. So, that's why I'm in business, is because a lot of people don't have the hustle, which I kind of poke fun of them, because I'm like, okay, if you can't go find 20 people to go interview, how do you expect to go sell to millions? Like, at some point, you got to go be a salesman. You got to go have some grit. But I understand, a lot of us are, as entrepreneurs, it is our baby, and we're afraid to show it to other people, and we're afraid to have other people, dislike it. A lot of times, we have this mentality where if I'm going to go find people to go do validation with, I could have actually just sold to them. So I don't want to waste my channels or my resources of somebody who could be a customer by getting now validation from them, where I'm more learning instead of selling. So we kind of have this position where it's hard for founders to go find validation for their own ideas, as funny as it is. But where do we find them? Well, a lot of times Facebook groups, that's like the go-to easy way to do it. Online on Facebook groups, Facebook has already gathered literally millions of groups of people who are in certain target segments. And you can go on those. There's LinkedIn influencers if you're doing something for B2B. Instagram influencers. You can go onto Reddit forums. You can use You can use third-party data sources such as a SurveyMonkey. That's super tricky to do right because you get a lot of crap data. Ways to do it, but it's just very hard. Other than that, maybe mailing lists. I mean, just think of where are the channels that your competitors would sell to, and then how do you get access to that group of people and either get them on a call for some validation or have them take a survey.
Yeah, that makes sense. So are you just building like your surveys just using like, isn't it like Google Survey or something?
Yeah, we actually have a course that teaches people how to do it correctly because surveys is one of the things that you can get incorrect data really easily. As I mentioned before, the key to getting good data is making sure that you have actual customers who are in your target market. When you're in an interview,
Yep.
you can ask follow-up questions all day long to say, okay, why did you give me a 3? And can I understand, can I please you, X, Y, Z? When you're in a survey, you can't ask follow-up questions. Once you've made that framework that here's the question I ask, you send it out there, you can't ask follow-up questions. So it's really, really hard.
Yep.
And you have to be an expert or have learned from an expert to be able to do this. And we use, as far as when we do surveys, we actually use a Question Pro. It's a really powerful enterprise software. For the average person, though, we teach them to use Google Forms. There's a couple of add-ons that they can download to make that even more powerful. But
Sweet.
yeah, just Google Forms and a couple of add-ons, and you can get good data.
Eric, tell me how many people you've saved. Like, how many people have you saved? Like if you had to like put the
You
amount
gave
of
them
money,
salvation.
like how much money have people not put on the table, rightfully so, because you've saved them? Tell us a couple stories about that.
I love doing this because I've been in everybody's shoes. Like I was the founder, was so convinced that I had the right idea, and I almost borrowed $15,000 from my parents when I was in school to go launch this app that, like I said, was the stupidest idea ever, and I would have lost all that money. So for me, it's a success whether or not I tell them that your idea is good or if it's a failure, because like you said, you're saving them money. So, I mean, just some stories. We had a guy just last month that had this idea for an app that helps people meet their goals. He had this pie in the sky and wanted to build this whole thing, but he was smart enough to know that he needed validation. That's the thing. A lot of people that come to us, they are smart enough to say, these are assumptions. I'm okay with being proved wrong. We ended up doing some tests for him, and I think he got like a 6.3 for a score. Just not high enough. And that's the thing where most people's ideas aren't bad. They're not terrible ideas, because we can all hear a terrible idea and we know it's a terrible idea. Someone will usually tell them, hey, it's a bad idea. The problem is most ideas are just too mediocre. And when you fall in that 5 to 7.5 range, it's just, yes, you could be successful, but your success will be very limited and it'll be very dependent on your advertising budget. If you get something that's in the 8s, then you have this wow factor, this virality, this word of mouth effect that can really help you increase your growth. So most people, like I said, don't have terrible ideas. Well, actually, I used to tell people and I don't know if you guys do this, but a couple of months ago, this guy came to me with this this dating app. It was very similar to this dumb dating app idea. This is the one I talked about. I almost spent $30,000, $15,000 on doing this development. And I listened to his idea and I pretty much told him, I'm like, I don't want to take you on as a client because this is a really stupid idea. And you have like a 2% chance of failing, like of succeeding. Like if I had to put like an actual like bet on this, like you were literally trying to rebuild Facebook. There's no unique value proposition that hasn't already been done in all these other services. And he was so convinced though that he was right that I said, okay, if I were to go do a report for you and I was going to go get 100 customers to rate your product and the data came back saying that this is a bad idea, what would you do? It's like, well, I would probably look to see where the data came from. And if it came from really good places, then I might consider taking some of that feedback and seeing if there might be something I might change. But overall, I'd probably still go with the idea. So it's like, okay, how can you really, I never heard from the guy again. I'm like, okay, like we can do the project for you. I'm telling you, you probably shouldn't, but he ended up, and I think he had a couple $100,000 of friends and family money. And I bet you right now he's spending that with some dev shop building something that's going to completely fail. So it's sad, but the reality is they are so convinced that they are right that they cannot hear that they are wrong. And for me, it's there's a difference between being right and having been right and throw your ego out the window. Don't convince yourself that your first idea was right. Exactly. Go get the data so that you can be right tomorrow.
Yep. It's really hard. It's really hard to fight data, right? If you have a good, solid, like, listen, this is science. This is data telling us that this is not a great idea. It's hard to fight that, right?
Yeah. How often do you see like scores? I mean, have you ever seen a score go from, let's say, like a 5 or 6 to a 9? And is it really just as simple as pivoting your features and giving in to those people who said, like, hey, we need this feature in order to buy? Like, is it really that simple in theory, or is that super complex?
No, it's actually pretty simple. But the reality is, you're never going to score a 9. For an average target market, it's actually really hard. It sounds like such a simple test, like 1 to 10. Like 10, I would buy that. But customers are real, and the highest score that we've ever seen was, I think, a 9.2, and it was a Dirty Dance instructor class for this local business that had a cult-like following. I'm telling you, like this phenomenal entrepreneur started a local fitness class in the Vasa gyms, and she ended up having like hundreds of people love her classes. And then she said, I'm going to start this instructor program. And she went out and she did a test because she had a lot of people saying, I want to be an instructor. And she got like a 9.2 on it, which was phenomenal. The thing is, that target market was so niche, though, that it couldn't ever be, a nationally successful thing. So as you actually increase your product market fit, you are delivering such tailored products that your market is quite small. And so what we like to do is we like to say, how many people are in that market? We've done a price analysis usually, and you multiply that out, and that's your total addressable market. And really, a lot of times we say, okay, can we actually back off a little bit, maybe get a little bit more market segments in here and provide features that still have, around an 8.5, 8.6. Now, with that same target demographic, of actually, I just did another test. This was a year ago that I did the first test for this instructor class. That same entrepreneur has, it's called, I think, Dirtylicious On Demand. It's an online on demand. It kind of came out of quarantine, doing the classes at home, and she had scored around a 6, just like a month ago, with her price at a $20 price point per month. Who she had thought was her target market was all the people that she saw in the gym. It was all the, people who were gym goers that came to her Vasa class that really got to know her, got to love her. And that's who she thought her target market was for this online streaming platform. When we did a price analysis, we found out that from non-Utah people, from people who did not know her at all, it was just found them online, it was actually a completely different market segment and a different willingness to pay. The people who scored her app, it went from a 6 if we drop the price from $20 a month down to $10 a month. And we focus on people who don't go to the gym, who don't exercise more than 2 to 3 times a week. But those people who are looking for a fun workout, that's where she had product market fit. And that's where it was going up to, I think, about a 7.5. So it was interesting because who she thought was her target market, going to the gym every single day and they're, exercising all the time, was the exact opposite of who the online target market was fitting. And that price was way lower than what she was expecting. But now she's able to measure that. So it went from something that was a 6 up to a 7.5, but realizing she's throwing out this target market and focusing on that one.
Yeah. So Eric, just to kind of go along with that, I mean, we have a lot of customers who come to us, and one of the big questions we ask and we consult with our entrepreneurs is how to monetize their business, right? Like, obviously, we want to make money on this.
And everybody thinks that they can do it with ads, huh?
Everybody, when the first time when they say ads, we just kind of go, okay, continue. But a lot of times we talk about subscription based or to be able to buy more features, things like that. How does an entrepreneur know what to charge, right? When it comes to price and target market, how do we find that? How do we know that number?
Yeah, because I see most founders, like a lot of what I see founders do is like I feel like start low and increase it, or start high and move it. And I see them change their prices literally like every single month. And so, there's got to be like a strategic way to do this.
Yeah. Pricing's a tricky thing, and there's not a one size answer that fits all, because you have, what type of market are you in? Is it more of a oligopoly, or is it a monopoly, or is it, perfect competition? So there's not really a perfect answer for all. But I will give this general advice. Usually entrepreneurs are in kind of a monopolistic competition. They're by default starting something new, and they're trying to say that I have a new product that there is no exact competitor of. I mean, why in the heck would you build something that you're just copying someone else? So that's really good because it makes the price analysis easier. Now, if it's B2B, it's kind of tricky. If it's B2C, it's a little bit easier. This is how you do it. You just go to your customers, again, verify that either they're your customers or somebody who would fit in your target market, and simply ask them this question word for word. What is the most that you'd be willing to pay for this product? If it was even $1 more, you wouldn't buy it. So let's say you got an app, it's a subscription. We did one for a guy a while ago. It was an app that had a number of people were willing to pay $1, $5, $8, $10. What do? Most people, they average it out. Average is the wrong way to do it, because really you have to find out what is the cumulative total and actually do a price graph to figure out where that profit maximizes. So when you do an average on that guy's price analysis, I think it was about $4 was what the data was saying. But really what you should be doing, let me see if I can kind of spell this out to you verbally. It'll be a little bit difficult. You take the data and you rearrange it from greatest to least. So let's say that you had one person willing to pay $20. And let's say that you had 3 people willing to pay 15, and then you have everybody willing to pay 0. Well, Stick with me for a second. Really, what is your revenue? It's price times quantity. Okay, with this group of people, if you had it at $20, how many people are willing to buy? 1. So your revenue is what? $20. Okay, well, if you moved it down to $15, well, there's 3 people that said 15. Well, here's the thing. There's actually 4 people willing to pay 15. Because there's a guy who's willing to pay
the $20.
Exactly.
Yep.
So now we do a cumulative total. So there's really 4 people trying to pay 15, and then you keep adding that down to where everybody's willing to pay 0. If you do that, you now look at the revenues and you'll say, okay, if I had $20 price point, then my revenue is going to be $20. But now it's 4 times 15, that's $60 if I moved it down to 15. And let's pretend that there was 8 people willing to pay $10, that's 80. But then once you hit $8, it's only 11 people. So it's only going to bring you up a little bit more. Now we know $10 is a profit maximizing price point, and we figure that out. You can take it one step further. If you have costs involved, then you can actually do price times quantity minus the cost equals revenue and figure that out. And you can do this with some calculus graphs, or you can just do it just by some simple Excel tables. And at the end of the day, you're going to get a number that you then A/B test with. Like you said, you have to A/B test it. And so that's the number you start with, and then you go test it for a certain period of time. And you try not to change, like you said, don't change your ad campaigns, don't change your channels where you're marketing. Try to keep the test clean, run it for maybe 2 weeks, see how many people you get, and then why don't you raise it a little bit and see how much you get. Maybe lower a little bit if you had less revenue coming in. So it's quite a bit of testing that's involved for B2C, but that's an easy way to do it. As far as B2B goes, the best advice that I've heard on it is you can't simply ask people what is the most they're willing to pay, because business people aren't going to ever tell you this is my.
They're never going to tell you that number. Never.
Right. So what you have to do is you have to calculate what is the value that you're providing. And then from there, it's negotiation on the value you're providing. So as a general rule of thumb, if you can save somebody, let's say $100,000, then you could probably expect to get about 20 to 40% of that value back. As you approach 50% of the value you're providing, people start to think that you're getting greedy, and they don't see that as a fair deal. So that's just kind of a general rule of thumb, 20 to 40%, but it's what you can really negotiate. The hard part is actually measuring what type of value you think you can offer that company.
So Austin, I'm gonna stop for what podcast, whoever's listening right now, I recommend pausing it, going back and listening to that one more time, because that information that you just gave on how to find a price point that is so good, because a lot of people just have no idea where to start, right? And the way that you just broke that down, even someone as smart as me, which isn't very smart, understood that. and I thought, you know what, that makes sense as you break it down that way. And I think there's a ton of value when it comes to trying to find your price point. Because again, we got people that are just like, I think we're just going to do this. Why? Why do you
People
want to
pull
do it at
numbers
that
out of
price
their
point?
butt all day long.
Yeah, all the time. So we can put numbers behind that, and we can really do a cost analysis on that, which is phenomenal. So pause, replay that, catch back up to us again.
Yeah, I love that. So for all the founders out there, I mean, a lot of people are also going to look at getting funding at some point. Would you say that the people who have gone in and done what I'm going to call a mathematical piece, I've decided that validation is no longer just like other people's opinion. Like validation is 100% like math, like with everything that you've got to
Yeah.
do. Do you think there's a huge impact or that you've seen with someone who doesn't come in and does a pitch versus somebody who walks in with a binder, slaps it on the table and says, we've got product market fit. Like these are the people that are willing to pay, like pony up.
Well, I mean, think about it. I mean, you guys aren't investors per se, but you guys are investing your time and resources. And if you guys can only take on so many people, so you're looking for the best clients. Okay, investors, they can only take on so many investments. Who are you going to have take on as a client or as an investment? Some Joe Schmo who says, I love my product. Everyone I talk to loves my product. It's a great product. Or somebody who comes in with third-party, unbiased market research report that says, here's 200 customers that we talk to. Here's what our product market fit score is. Here's what they like. But equally being transparent and saying this is what they dislike, and showing that so that it's got a little bit more validation behind that. We actually did our research and we're okay with showing you what people dislike about it. And then this is a price analysis, and based off of this is what our total addressable market is. Multiplying that out, this is what you can expect to see as far as how much value this idea is in. If you're that methodical before you go in to get investment, they're going to look at you as a much more high quality founder who is willing to let data actually make the decisions, and not going to be so attached to your baby that you're really fighting tooth and nail against any type of market change that you need to do as you go on as a founder.
Yeah, passion's seriously only going to get you so far, right? Like maybe in a couple, maybe some angel investment, but when you're really trying to get VC funding, Series A, like I feel like information like this is so valuable.
And we've had people who've taken our reports and they've been able to get $100,000, $200,000, even more than that, just based off of here's more market validation that we've done it right. Now, I wouldn't say that necessarily getting a high product market fit score is the end of all end, because really that's market desirability. If you look at the three risks that any business faces, there's market desirability, then there's the financial viability, and there's the technical feasibility. And market desirability is the first one you should always test, because 42% fail because of no market need. But after that passes, after you say, okay, awesome, I've got a good venture validator score, then you need to look at what you guys look at, the technical feasibility. Can this even be done? And then proving out that financial viability. So you can still have a really cool product idea that has a terrible business model that just completely flops.
If I'm an investor and I'm going to put my own money into a company, I want to know that those decisions are driven by data rather than emotion, right? How many businesses can fail because of emotion rather than data?
Yeah. Yep. And like you said, we're a lot that way. We want every client that we bring on, like we've got to know like 100% that the person running the show is like able to run the show and should be running the show. But more than that, like willing to hustle and willing to like make something out of literally nothing, because that's what this is like from the ground and nothing.
And like you said, when they come to you, they have a pie in the sky idea, and this is a scientific method to say, this is what my MVP should be. And now you're going to investors and saying, hey, I don't need these 15 features. I just need to build these 2 features. And this is who I'm going to target for my early adopters. And I need less money to get there. And you go execute on a plan that has data behind it instead of trying to shoot in the dark. Because like Boji pointed out in the beginning, money's sacred. And you only have such a finite runway. As soon as you're out of that runway, you're gone, you're dead. So you have to make those pivots as quick as you can so that you can now have a business model that's cranking in money from customers as opposed to investors to fund the rest of your development to make that pie in the sky idea.
Yeah. Eric, let's talk a little bit about why what you offer can, because here's the deal. As an entrepreneur who's listening to this might be overwhelming, right? Wait, you're telling me I have to go find out thousands of people and I got to go ask tons of questions. Let's talk about you real quick, a little bit about what it does in these last few minutes and kind of that.
Sure. So are you just trying to figure out process and step 1 to step 10, how's it work?
Yep. Yeah. I mean, just kind of a quick overrun about the what the company can do for our listeners,
Sure.
and we've talked about a partnership and be able to connect
Sure.
to find that information out.
Yeah. So, first off, they have to be a good fit for us too. And so, someone who's a good fit, it's market desirability. That's their number one risk. It's something that has that risk of, I don't know if people actually want this product because nobody's ever built it before. If that's not the risk, if it's a franchise you're making at McDonald's, like you're not going to be using us in the first place. The second thing is, can you tell me what your feature set is? And people who already have a little bit of an MVP, it's fairly easy for them to do that. Those that come in and they have the 15 minutes to 20 minutes and you're like, I still know what your idea is. We take them through a process where we have them give us the 7 pieces of their product description. And there's a revision process. So someone who's our client will usually go back and forth for 3 to 4 days where we really, really try to extract what is the core value proposition. And that's very helpful for a lot of entrepreneurs because we're kind of ruthless and we don't let them have foggy ideas go forward because then we're going to get bad data and that's a really bad reflection on us as a company. And we won't let that happen. So that's kind of one of the services we provide is refining that product description. Then on the flip side, it's okay, who's your target customer and refining that. From there, we simply go find people who are in their target market. So it might be 100 customers that fit those target demographics. Usually we're actually collecting data from 2 to 3 times the amount of people to make sure that we're only using highly qualified customers. And then from the back end, we just have an enormous process to clean that data. A real human analyzes every single response. We match it up to a bunch of different indicators on whether or not they're in their target market, and then just splicing it up into buckets of here's the value propositions, here's the objections, here's the suggestions, throw these ones out because they're worthless. Let's do a price analysis, and then pretty much putting it all into one simple executive summary with an appendix report that says, this is your level of product market fit on a scale of 1 to 10. This is who your target market is. This is what your number one value proposition is. Number one customer objection, suggestion, and price point. One simple document with a 10-page executive summary showing the data behind each of those. And that way the entrepreneur can know exactly what they should build for that MVP.
Or better yet, the investor will know.
Yes.
Right? You slap that on a table and just walk out. I hear that's all that they have to do once they get that information.
And I mean, all of that information bringing so much value to both you and whoever's investing for probably what's under like $10,000. Like seriously, just so crazy. If I'm going to give any piece of advice to the people listening to this show is 100% start with product market fit, then come talk to us. Then come tell us about your idea. Tell us what features are important. Let's design it. Then take that design back, that prototype, and retest it and then build it. Like, don't go and blow $50, $100, $200,000 with no information, right?
Which I'm going to make a shameless plug. We're willing to do that, right? We're offering an offer where, like, listen, we will put you in contact with Eric. We'll have him do all the testing. Come back to us. Let us build you a prototype. We'll teach you about the different marketing and the data needed, and then you can go back and retest it. That's something that's not a shameless plug there at all. We're totally willing to do that. For sure.
I got to compliment you guys. I've been on quite a few podcasts, and you guys sent an outline of a couple of questions you guys wanted to ask, and I was really impressed. I'm like, wow, these are really good questions. It's very obvious that these guys have experience and know what they're talking about when it comes to product market fit. Because so many podcast hosts, they really don't know what questions to ask. So I usually give them a list of, okay, here's kind of the things that we can talk about and what can really, be meaningful for entrepreneurs. You guys are already asking really in-depth questions like, oh my gosh, like these guys know what they're doing.
Well, that makes one of us that thinks that. So we got you fooled. That's all I got to say. Just kidding. So, that's something because honestly, Eric, we talk to people all the time, and I mean, you say most people don't have bad ideas. I beg to differ. There's some pretty bad ideas out there that we hear all the time. But the thing is like as a company, when we're building these helping build these projects and build these babies, basically. That's a weird way to put that, but we're building these things. We want you guys to succeed as much as anybody. Like if we build an app that doesn't succeed, that doesn't look good on us as well. Same thing you said earlier, right? Is if you don't get good data, like that reflects poorly. We want a company to succeed just as much as the entrepreneur, because that also helps build our portfolio. That helps, and when people say, hey, that company, they helped build that, that's us. And that's kind of the mindset. Is that's why we want to go into these deeper questions and try to get that market validation.
Yeah. Eric, again, thanks so much for jumping on. Just really quickly, tell everybody where they can find you. LinkedIn, website, where can people find you?
Easiest way is just venturevalidator.com. They can go in and kind of see some of the projects we've done there. And if they want, they can reach out, request a demo, or take one of our training courses.
Okay, sounds good. So venturevalidator.com, and then Eric on LinkedIn. Go find him.
Perfect.